All right. Well, I'd like to thank everyone for joining us today. We'll go ahead and get started right at the top of the hour here as folks are tuning in. We have a wonderful topic and presenter today that we are going to be talking about the Payroll Protection Program and what happens if you get funding. I know that's a question we've been talking about in our office and with our team. What do you do? And clients are asking about this, and now the reality is setting in. First, it was how do I get funding and how do I apply and what do I do? And lots of questions orienting around that. So today, we're going to be talking about now that if you have received funding, or maybe you have franchisees in your network that have received funding, or you're a small business and you've received funding and you're asking, what do I do with that? So I'm excited to be talking about this topic. This is a continuation of our Navigating the Coronavirus Economy series. This is already week 7 that we've been doing this session. And we are pleased to have with us Jamie Trull with Balance CFO. She is the founder and owner of the company and really has become an expert on this whole program here. Which has been really, really exciting. So, and how we found Jamie actually was we had received funding and we were reviewing it internally, and my assistant Yvonne had said, "Hey, I found this great spreadsheet for us to use. I've been following this spurt on this whole situation." I said, "Well, who is it?" And she said it was Jamie, and here she is. We said, well, we have to talk to her and hear what she has to say and where she's going with this. So without further ado, I'd like to turn things over to Jamie Trull to share with us her wisdom, expertise, and knowledge on this very new program and what we as small business owners should be doing as we're navigating it. So Jamie, take it away.
Jamie, you lost your audio.
Here we go. Can you hear me?
There we go.
Yep.
I put myself on mute and then didn't unmute myself. Go figure. Hi guys. Thanks, Tom, for the intro. I do feel like this is a topic that I've been talking about a lot lately. Go figure. And that's why you guys are here, right? Because things are changing. Everybody, a lot of people are getting their PPP funds, which is great, right? At the very beginning of this, the first round went so quickly and it was a little bit worrisome whether, real small business owners were going to be able to get their piece of the funding. And now a lot more in this round 2 have received it. And now very quickly it switches from, okay, great, I got to get the money to, okay, now what the heck am I supposed to do with this money? And so that's what I'm seeing, the shift happening with people in the race to get it. And now how do I use this and make sure I'm using it correctly? So that's really what I've been talking about for a long time. So I, as Tom said, I'm Jamie Trull. I own a company called Balance CFO. My main business though is I'm typically teaching financial literacy concepts to small business owners. So helping them understand how to understand, strategically make decisions in their business based on their numbers and make more profit. So that's usually what I'm focusing on over the last, 5 weeks, which seems like it has been 5 months at this point. But over the last 5 weeks, I've pretty much pivoted entirely into all stimulus related relief efforts. So I'm a CPA by background. So I've kind of pivoted back into my CPA role, trying to just help people make sure that they can get the funding that is available to them and that they're aware of what it is and what to do with it. So that is why I'm here today. So hopefully I can help you guys as well. So I do have, as Tom said, I have a tool, and at the end, I'll give you kind of the link to go get your own tool. So make sure you stick around for that, because I think it is going to be helpful. It's a planning tool to help you actually put down on a spreadsheet what you need to spend and what that's going to mean for forgiveness for you as far as where we are today. So I want to do like a quick intro. I mean, you guys probably know about the program, but just to level set about the program, what matters for forgiveness, what are the things you're going to have to prove, all of that. So we'll walk through that first. The caveat I always have to make on these things is, today is May 8th, right? Things are changing. Tom and Yvonne and I were talking about this before you guys came on, but things are changing rapidly in this environment. So, we are going based on the information we have. We have a good bit of information today, but there are still some holes in the guidance we have gotten from the Treasury Department. So some of this I can fill in as best as I can with what I believe to be what will happen, but I always tell people, take it with a grain of salt and pay attention to any developments that come on after this. And I can tell you at the end too, how you can follow me and any updates to make sure that you have them if things do change in the future. So I think that is really important, but we're going to talk about where we stand with PPP as of today. What are the rules? So let me jump over here. I'm going to share my screen really quickly. And let me know, let's see, when you guys can see it. Okay, can you guys see the screen?
Yes.
Good, okay, great, thanks, Tom. Okay, so we're talking about Paycheck Protection Loan Forgiveness now. So let's do a little bit of level setting on what we are talking about. So the PPP program, it's from the SBA. These are forgivable SBA loans. So they can be forgiven, they can be partially forgiven, or they can not be forgiven at all, depending on what you use them for. And really the purpose was mainly not just to provide a low interest loan for business owners during this time. This is really more about keeping jobs. So I think that's really important when we're talking about PPP, that we remember the purpose of why the government came out with this to begin with. And it's all about jobs. It's all about trying to save jobs. It's all about trying to get people off of unemployment and onto this program instead. So basically taking, instead of unemployment, paying all of those workers who are out of a job, to try to get employers to come back and pay them as they normally would to try to save those jobs. Because you guys have probably seen, I mean, this morning, the new jobs report for April came out, and I think it was just over 20 million unemployed, almost 15% unemployment rates. And personally, if you were to ask me, I think that's low, because there are a lot of people who've tried to get unemployment and haven't been able to get it yet. So I think that's actually going to be on the low end. So they're seeing this problem, and instead of having the unemployment system be responsible for paying these people out, they would rather see employers hiring people back, kind of getting the economy going again, right? So that's really the main purpose of PPP when we're talking about it. So what will make the loan forgiven? And we're going to get more into this, but the loan amount will be forgiven as long as the loan proceeds are used to cover payroll costs, mortgage interest, rent, utility costs, and also there's a standard in there for interest on other business debts if you have that, over an 8-week period after the loan is made. Now, there are some specifics you have to follow in there. So it's not just spend it on any of those things and it will be forgiven. We'll get into that in a little bit. And then there's also a kind of a rider that employee and compensation levels are maintained. So again, they want you to hire back the people that you let go of, or at least the same number of people, and pay them relatively the same amounts to be able to be forgiven. That's really what they were aiming at. And they wrote this thing, and I know you guys probably agree with me, it's a little bit more complicated than it probably needed to be, but it's because they were trying to incent that behavior. They wanted employers hiring people back and paying them relatively what their wages were to try to get things back on track with the economy. So we talked about this. What can we use these funds for? Look, this is a little bit more detail on that. So payroll costs, including benefits in most cases, interest on mortgage obligations that were incurred before February 15th. So this is business mortgage, right? Not your home mortgage. This is if you have a warehouse that you need to pay, or if you have a restaurant and you own it. If you don't own it, then your rent payments under lease agreements that were enforced before February 15th. Ultimately, they don't want people going and signing a new rent agreement right now and then using the money to pay for that. They want to help people who already had rental agreements in place and utility agreements in place. They want to help take the burden off of people who are struggling because they can't meet those obligations, or they're having trouble meeting those obligations because perhaps their revenue has taken a pretty significant hit. Either they're closed, they're partially closed, whatever it is. So that's really the point. And then utilities, again, same thing. So you'll see that February 15th date. What does that mean? That February 15th date was basically the date that they're saying, okay, this kind of started right around that time, right? They're coming up with a roundabout date of like, okay, We started to see the impact in some of those earlier states around February 15th. For many people, it was into March before they really saw much of an impact, but they kind of put a line in the sand for the February 15th date. And then, like I said, interest payments on any other debt obligations incurred before February 15th. Again, this is business debt. If you had a fixed asset, payments, if you had a loan for fixed assets that you bought or something like that, this can help you pay those debt obligations, but only the interest portion. Okay, so that's really the point of this. But again, main point is a payroll loan. And then if you do spend the money on payroll, they're going to kind of, throw you a bone and say, okay, if you spent what you're supposed to spend on payroll, then you get to also have some money for some of these other obligations, right? That's the point, is not to pay for the other obligations necessarily. It is mainly to give you kind of an added bonus, an added reason to rehire so that you can also get forgiveness for those payroll costs or for those other costs. Okay, so jumping on. Just real quick, I want to talk on what are payroll costs, because it's a little bit nebulous. So this is, again, one of those places where they made a lot of very specific rules here. So gross salary, if you're paying employees, their gross salary counts. So this was a little confusing in the first round because they had just, the way that they had worded it was a little bit even contradictory within the CARES Act itself. But what they meant was gross salary, meaning if you pay an employee $5,000 a month, right? Probably a portion of that. So, maybe 4,000 goes to them, 800 goes to the federal government, 200 goes to retirement contributions, right? The whole amount, the whole 5,000 the gross salary is what you can pay PPP with. So that was one thing that was a little bit confusing at first, but they have come out and clarified, no, it's the whole gross salary for them that you can pay. You can also include employee benefits that you're paying on their behalf, including retirement and healthcare contributions. So those also will count that you're making for them. And then we'll get a little bit more into the sole proprietor calculation because it's a little bit different, right? Sole proprietors, there was some confusion in the very beginning around what happens to sole proprietors because they're not on payroll, right? If you're a sole proprietor, an LLC, you don't pay yourself on payroll. So you wouldn't have a payroll report to be able to support your salary. But what they came back and said, and it's part of the interim final rule, if you go out on the treasury.gov website, you can find their interim final rule on this. It's the one from the 14th of April that said, no, you can't include a part for your pay. And the way that you calculate that is to take your Schedule C from your tax return, right? So your 2019 tax return, which most banks were requiring towards the end here for you to have that filed. So you take that amount, you go to your Schedule C in your tax return, line 31, which is your net profit. It's basically revenue minus all the expenses you can deduct in your business, your net profit. That's the amount. And the reason there's been a lot of question around why is that the amount? Why is it my pay after expenses that counts as my owner pay? The reason for that is that's what you pay payroll taxes on. That's what you pay income taxes on. So that, in the eyes of the IRS, that's your income, that as an owner, that's your payroll as an owner. That's what you're paying those taxes on. So that is why they are using that line 31 to say, this is the amount. A lot of people were upset about that fact because they may have had a really low net profit because they took a ton of deductions, or maybe even were in a net loss and therefore couldn't get a loan if they didn't have employees. So that was something that was based off of, if you didn't pay payroll taxes, they're not going to give you that as payroll, right? They're not going to consider it payroll unless you've been paying payroll taxes on it. So that's really the why behind it. But that's considered your owner payroll was that line 31 net profit. That's what you basically had available to be able to pay yourself from your business. It doesn't go by owner draws. A lot of people thought it's the actual amount they take out of their business. That doesn't matter for a sole proprietor LLC. It actually is just that net profit amount. Because you can play a lot of games with what you keep in your business or take out of your business, and they knew that. So I think that's why they did it that way. And then what's excluded from payroll costs, right? Well, your employer portion of Social Security and Medicare. And this is one actually gets me a little fired up because I have a lot of reasons why I don't think that's a good idea. So what that means is the employee portion, that's fine. That's part of gross salary, right? the employer portion, which is 7.65% that the employer is paying on behalf of the employee for Social Security and Medicare, you still have to pay that. You can't use PPP funds to pay that money. And, I think that's a little bit of a hole in this whole thing, because what that means is a lot of businesses took this money, even though they're fully closed down and might be fully closed down for the full 8 weeks they have the money, but they wanted to be able to pay their employees and they wanted to be able to get some money to pay for rent, right? Well, now there actually is a tax burden that they have to pay for employees that they wouldn't otherwise have been paying. So you're technically still paying an amount, even though your employees might be sitting on the couch watching Netflix, right? So I think that, it makes a lot more sense for a business. PPP makes a tremendous amount of sense for a business that is still functioning and still able to give work to their employees and still able to bring in some revenue, because there's no limit. A lot of people have thought it's kind of like unemployment, that if you are making revenue, you can't take PPP. That's not true. There's no limit. Now you do have to say that you need it and that it's something that is something that there's an economic need, but it doesn't mean that if you make over a certain amount of revenue, you can't take the PPP loan. That doesn't exist. So that's kind of an interesting one to me, is that, yes, you do still have to, there is still some burden on the employer for hiring back these employees, regardless of whether they're working or not. So if you're one of those people that's trying to figure out, what are you going to do with this money? I have been recommending give your people something to do. Whatever that is, even if you're fully closed, can somebody, can you pay them to do some training that will benefit you later? Can you hire somebody as a W-2 employee to redesign your website, right? Use this money. Don't just use it to pay employees who are just hanging out at home. Use it to get something beneficial done in your business, right? Even if it's not necessarily what your core business usually is.
And Jamie, that's a great point. This is Tom, just to jump in really quick here. One of the things that we've been talking a lot about with our clients, this is a little self-promotional, but to your point, we have this program called Fran Leadership. It's an online training system that you can upload training. So for those of you who are listening to what Jamie said, it's a great, everybody's got a cell phone or that they can be recording how to do things. Now might be that time, if your restaurant shut down or a retail business or whatever kind of business it is, to be having the staff walk around talking about opening and closing procedures or prepping this or that or whatever it might be, that you can go into and start discussing and getting some of that on video or on audio that could be later used and uploaded into our system, which, by the way, we're offering 6 months free right now, just to load up and have as a training tool when you come out of this. So just throwing that out there. If you're looking for an idea, here's a free one for you. So anyway, back to it, Jamie.
Yeah, I mean, that's totally true. I just have heard so many business owners that are saying, well, my employees don't have anything to do and I'm paying them to do nothing. Don't pay them to do nothing. Either don't hire those employees back and hire somebody else that is useful that you can use in your business. It does have to be a W-2 employee, right? So think about that. It doesn't have to be a long-term employee though, necessarily, right? You can do some project work and bring somebody on as a temp W-2 and get some work done for your business. Or you can give your typical employees different jobs that will help you in the current scenario. Get your social media running, like whatever it is, there is something that can be done even if you're closed or mostly closed. So that's the advice I've been giving to people is, try to get this forgiveness, right? Try to get something out of this. Don't just, make it kind of a wash where you got the money, you paid employees, but you didn't get anything out of it. Try to get something out of this. And so additionally then, your FUTA and your workers' comp insurance, so your unemployment taxes, your federal unemployment taxes and your workers' comp insurance, right now those aren't included either. Again, though, that's something they haven't super clarified, so that could change, but right now the common interpretation is that would not be included either. For a sole proprietor, your owner healthcare and retirement contributions, unfortunately, are not included either, because those actually aren't business deductions. If you're a sole proprietor, those are personal deductions. So you cannot just decide, okay, well, I'm going to throw a whole heck of a bunch into my 401k to get this thing fully forgiven. It won't work, unfortunately. So, okay. So let's talk about what's going to impact loan forgiveness, because that's really important to know. So Your loan forgiveness is going to be reduced if you spend money on anything other than payroll, rent, utilities, mortgage, rent, interest on mortgage and utilities. So here's the thing though, a lot of people have been thinking, well, I'll just use this for the things that I need, like other things in my business, and just take it as a loan, right? And I don't need it for payroll. I'm not going to use it for that. So I'm going to go pay other operating expenses, with this, right? I'm going to go do marketing with this. Don't do that. So when you actually get the PPP, you certified that the only expenses you were going to use to pay with this money are these things. So if you do use it on other things and just say, well, I'm just going to make it a loan, that's actually, misuse of funds. And I do see them, they're not going to sit and audit everybody. No, they said they're going to audit everybody who gets over 2 million. They're going to the SBA is going to be looking at those people specifically. For anybody under that, they will do spot checks. But you will have to provide, at least when you are going to the bank for forgiveness, you're going to have to show them what you spent the money on. And I really don't recommend people decide to use this on other things, because I think on the back end of this, there's going to be a public outcry to make sure that funds were used appropriately. And they've already started investigating for fraud. Now, the people who are getting the fraud investigations, I don't want to scare anybody, because the people right now, I think there was one fraud case last week, and it was I think 2 brothers who basically just made up companies that didn't exist and falsified a bunch of documents to get $600K or so in PPP funds. So, I think a lot of smaller businesses are worried that they're going to be looked at for fraud if they do one thing wrong. If you're doing your best efforts to do it the right way, don't worry about that, right? They're looking for the ones who are egregiously going to be misusing this. But I still recommend making sure, even if you decide to take part of it as a loan, you can maybe decide, okay, I'm just going to take part of it as a loan and I'm going to pay my rent for the next 6 months with it, and decide I'm okay with that. That's okay. You could do that if that makes more sense. If you just need your rent paid and don't need to pay employees, take it as a loan and just pay your rent. But don't use it for other types of things. The one you guys have all heard, right? To be fully forgiven, payroll costs should be at least 75% of your loan, assuming you got the full amount of the loan, which is 2.5 times your average monthly payroll. 75% of that loan should go towards payroll costs. And we'll get into kind of some of the differences with how it works for a sole proprietor here in a minute. But this is kind of the key. They want 75% to go towards payroll. Like I said, that's the point of this loan. That's why it's there. Now, does it mean if you spend 70% on payroll, you're not forgiven at all? No, they're going to ratably reduce the amount that you would be forgiven based on that. But remember, and this is something that I think isn't super clear either in all the documents, if you spend less on, like, say, payroll, let's say you only spend 50% on payroll, you don't get 25% to spend on rent and utilities. The 25% is based off of the total amount you can be forgiven. So if that's like throwing you off a little bit, that's why I made the spreadsheet that will really help you at the end here to kind of conceptualize what that means. But it is, if you decide to pay none of it for, I've had some people say, well, I'm just going to get my 25% for rent and utilities and not spend any on payroll. You won't get your 25%. You will get 0 forgiven if you spend 0 on payroll. So it's all a factor of how much you spend on payroll. Like I said, this is a payroll loan. That's really what it is, with a couple of bones thrown in there for business owners. So we will walk through that calculation though here at the end. Your forgiveness is going to be reduced if you don't spend all the money on eligible expenses over 8 weeks. You have 8 weeks from the day you get the money. I'm getting all kinds of questions about, can I pay my rent from March? No, even if you haven't paid it yet, you can't. It says there's a little bit of confusion because it's not worded very clearly. And again, this is something they could clarify and say, actually, you know what, if it's paid in the 8 weeks, it'll count. But right now, the way it's worded, the most conservative interpretation is that the cost has to be both incurred and paid during the 8 weeks. So if you got this, on May 5th, probably your May and June rent is what would count, right? For this. Same thing with payroll. It's going to be the payroll, even if you have back payroll that is owed, it's probably most conservative to assume it's only what is incurred from the day you get that cash in your bank account, not when you sign the papers, when you get the cash, through the end of the 8 weeks. So that's what I'm telling people is best. Again, we're still waiting on a little bit of clarification because there are some questions still around, well, can I prepay my rent? More than likely not. So I wouldn't count on being able to do that. But it's not impossible that the Treasury comes out with new guidance next week that says that's okay. So that's something that we're watching. But right now, conservatively, incurred and paid during an 8-week period is what we need to be looking at. And then the headcount reduction, and this one gets real confusing, I will tell you, and I have in my spreadsheet a little bit of a discussion around it for that reason. But the headcount forgiveness, you can be, essentially your loan forgiveness can be reduced even if you spend 75% on payroll, right? Even if you do everything, if you spend it all correctly and you normally would be able to get 100% of it forgiven. If, let's say, you had 5 employees and your typical full-time equivalent headcount, which we'll talk about in a minute too, not just your regular, like how many employees, it's your full-time equivalent, which is calculated a little bit differently. But if your full-time equivalent was, during one of the periods that you can choose to look at it against, was 5, and you only hired back 4 of them, that means that 20% won't be forgiven. So if you were going to get 100% forgiveness, you're only going to be forgiven for 80% if you don't hire that 5th person back. So that's why a lot of people are scrambling to find more people who they can hire if some of their employees don't want to come back. Now, the Treasury did, so this was, I think, a good thing. The Treasury did come out and say, look, for a head count, we understand people are having trouble getting their employees back. So some of you guys might be having that situation where unemployment benefits right now, at least through the end of July, with that extra $600 a week, may be a lot more than what they were getting previously, especially for some of these part-time employees, low-wage workers. Restaurant owners are having this problem like crazy, right? Because people are making double, maybe more on unemployment just hanging out. And so they recognize that issue and they said, okay, employers, if you send and I recommend doing this via email. I think it's the best way to make sure you maintain documentation. But if you send an email offering somebody their job back, right? And they decline coming back to the job, then that will not count against you for headcount purposes. Okay, so that will not impact, you won't get that kind of headcount reduction that you would otherwise have gotten. Now, the flip side of that is you have to give that as support. And if that employee continued to draw unemployment during that time frame when they shouldn't be because they've been asked back to work, now there are probably a few exceptions to that rule, but in general, in most cases, those employees will not be eligible for those unemployment benefits, and they might get them clawed back if they continue to take them. So that it can be considered unemployment fraud, and it's probably not something your employees really want to do. So that's where it's hard for employees, right? Employers, because you need to spend this money on payroll so that you can get your loan forgiven, and so that you can get money to pay rent and utilities and things like that. But your employees are making more, doing what they're doing. And so I think that's one of the biggest issues, that they didn't really think about the interplay and how hard this would be for employers to say, okay, well, I need you to come back though, because this hurts me if you don't, So at least they thought about it that way, but I still think, obviously turning people into unemployment is not fun. That's not great for an employer-employee relationship. So I think it's just going to be interesting to see how this unfolds. But those are basically the rules for forgiveness. So real quick, special considerations for sole proprietors, LLCs. So if you're not a corp, basically, we talked about that Schedule C net profit being how you would factor in your pay when you calculated the loan, that your amount that you will be forgiven as owner pay will be based off of that. So you'll take that Schedule C net profit, line 31. I can't tell you how many people I've talked to that had no idea what a Schedule C was or a line 31 until all of this. And now they can quote lines from their tax return. So most people, you probably know what that is now because you probably used it in your application. But your Schedule C net profit, line 31, take that, divide by 52, right? 52 weeks, multiply by 8. That's 8 weeks of your payroll. That is forgiven as your payroll. You do not need to support that in any way. You should not need to, based on Treasury guidance. So if your bank asks you to show support of you writing checks to yourself, which is silliness as a sole proprietor, right? Like they're not supposed to do that. It's supposed to be an automatic calculation. You still would have to apply for forgiveness more than likely. It's not just automatically forgiven, but the calculation is automatic. It's not, you won't get forgiven for more than that. You won't get forgiven for less than that. That will be the amount you're forgiven for, regardless of what you actually use that money for. So I think that's where it's been confusing for people to say, wait a second, I thought that I had to use this for payroll. I thought that I had to use it, in specific ways. Yes, but as a sole proprietor, there's kind of a workaround there where I think it's because they knew that if a sole proprietor is required to pay themselves, but what if they have bills in their business they need to pay? All they're going to do is pay themselves to show support for that and then put money back in their business to pay their bills, right? So I think they knew that idea was just kind of silly. So they said, look, it's a calculation. That's what sole proprietors will have their forgiveness based on. And I think it's a good idea, but I also think this whole 850 seconds thing, could they not have made that a little bit easier to follow, right? Okay, so yeah, and then in addition to that, so you'll still have, it actually comes out to about 73.8% if you do the math, which is frustratingly less than 75%. But it's okay that they know that they're kind of rounding that up and saying that's essentially 75%. And the rest of the money, the 25% or 26.2%, needs to be spent on rent, utilities, mortgage interest, interest and other business debt. I'm getting a lot of questions from people who are home-based, whether they can deduct it. It's a little iffy right now, and you'll probably want to talk to your bank about their stance on that. A lot of banks are definitely not allowing mortgage interest. They may allow utilities if you can properly support your business versus personal, similar to what you would do on your taxes if you happen to be home-based. Okay. Yeah, so make sure you're keeping good records, really important. Any amount that's not forgiven is a 2-year loan at 6% or at 1% interest, and the payments will be deferred for 6 months. So 6 months from now, those payments will start. All that information should be in the loan documents that you got from your bank. No prepayment penalties. So if you get to the end of this and any part isn't forgiven and you're like, heck, I don't want a loan, I'm terrified even though it's really low interest, you can just pay it right back. So there are no prepayment penalties, just pay it back if you don't want that hanging over you, totally fine. What records should you keep for forgiveness? For employers, payroll reports, that's your 941. And then you want to do proof of costs incurred, including utility bills, rental agreements, et cetera. So you want to have the bills, not just showing your bank statement to say it was paid, because they won't know what period it was for, right? They'll want to see the bill showing like, this is the period I paid this for. And then they'll want to see your bank statement just showing it was paid, right? It has to be incurred and paid in the 8 weeks, and you'll need to support both of those things. So that's really what you're gonna have to show at the end of this. So that was really fast, but I wanted to get through it and jump into the tool that we have here in a minute so we can run through it. For you guys who are watching right now, you can go ahead and go to this link and you will put in your email. It will email this immediately to you, and you should be able to grab it from your email. Let me know if you have any trouble at all. My email is Jamie, Jamie, at balancecfo.com if you have any trouble getting this tool. But if you want to go over and grab it, I'm going to run through how to use it. So this tool is really all about how do I track forgiveness? How do I know, right? You want to get it forgiven. You want to maximize your forgiveness, but there are all these rules. How do I make sure that when I'm thinking about, okay, how many employees I need to bring back, how much I need to pay them, how much rent I have, how do I make sure that I'm going to be able to get all of this forgiven? So that's why I made this tool, because it just made it a lot easier to sort of visualize and put in your own numbers to see it. So give me 1 second while I jump over to that. Okay. All right, are you guys able to still see my screen?
Yes, I can see it.
Okay, great. Is it showing? I don't know why there's, that might just be on my screen. Okay, so what this is the PPP planning tool. So what we are looking at here is essentially the things you need to fill out are gonna be in yellow, And everything kind of in this pink color, you won't touch. And it actually should be locked, so you can't touch it, just to make sure we don't mess up any formulas. But the things you're gonna wanna fill in are the things that are gonna be in yellow. So let's kind of walk through an example, because I think that's the easiest thing to do with how to fill this out. Okay, so first we're gonna look at our forgiveness period. What is our forgiveness period? Well, that's the day we received the cash. Let's say it was today, right? We put that in, it's gonna calculate out when the end of our 8 weeks is, so we know the exact date. Importantly, remember, if you have employees on payroll, I would recommend that you run a payroll run on the last day of that 8-week period to true up all the way through all the payroll that relates through July 3rd. So I know sometimes our payroll runs are kind of in arrears. I would run a bonus run, basically is what it's usually called, to make sure you get that in there, to make sure that you can properly show that it was incurred and paid in that 8 weeks. That would be my recommendation for you. Okay, so then we're gonna look at FTEE, okay? So full-time equivalent employees, full-time equivalent employees. Okay, I think I got that. So if we come down here, I first wanna describe what is an FTE or an FTEE, depending on what you see. So down here, if you come down to letter A, you're gonna see, and I don't know if is this easy to see, or do I need to blow this up a little bit, do you think?
I can see it, but I'm on a laptop computer, yeah. So someone on their cell phone, if they're watching on a cell phone, might be a little small for them.
Yeah, I'll blow it up just a bit to make sure. Hopefully that's a little bit better. So I do have some descriptions down here, which will be helpful. I won't read through all of it. But basically what a full-time equivalent employee is obviously if you have a full-time employee, that's one, that counts as one. Even if they work, whether they work 30 hours as a full-time employee or they work 60 hours as a full-time employee, it counts as one. For part-time, that's where it gets a little bit more complicated. For part-time employees, let's say you had a couple of employees working 15 to 20 hours. That is typically half an employee, okay? Because it usually goes by 30. For whatever reason, in the SBA uses 30 hours as the equivalent of a full-time employee. So what you can do then to figure out how many full-time employees you had is you pick these, there are two different dates that you can look at, okay, to determine headcount. It's either January 1st through February 29th, 2020, or February 15th through June 30th, 2019. Pick the one with the lowest headcount, because that's going to be your baseline that you have to make sure you rehire to for forgiveness. So you can look at either of those, but take that period and to figure out kind of your average headcount over a period. Let's say it was a week that you're looking at. You would take the total number of hours worked by part-time employees and divide by 30. And that's your FTEs for that week. So you do that over like that 2-month period and average that out and figure out, okay, this is how many FTEs I had, basically. And that is the amount that you're gonna have to basically, pin against during your forgiveness period. So I'll show you this up here. I will show you this up here. So you'll put both in here. So let's say, okay, I had, 4.5 then, and last year I actually had 5.5. Well, it's gonna actually turn green, the one that's the lowest, because that means, hey, use this as your baseline when you're trying to get headcount back to what it is. And remember, that's average headcount. So some people are thinking, well, I'm just gonna wait and I'm gonna rehire employees just over that last month. Well, that will not count towards your average headcount, right? Because you have to average it over the 8 weeks. So the longer you wait to rehire employees, that could come back to bite you. Now, there is, however, one caveat to that. And this is where headcount has been confusing for a lot of people, I think, and even for accountants trying to understand how these things interplay together. But basically, you also want to put in what were your FTEs as of February 15th, right? So, let's say in this case, it was 4 as of February 15th. That's as of that specific date. As long as you rehire, even if you don't meet the average headcount and you don't get it back over the 8-week period, okay? As long as you rehire all of those employees and by June 30th, they are all on your payroll again. You have an average of 4, and it can be different people. Again, it just goes by full-time equivalent employees are the same. then you will not be penalized for your headcount not meeting over the 8-week period, if that makes sense. So that is an option for some people. If you do want to wait and rehire people later, you can. Remember, if you do that though, it's going to be a lot harder to meet the 75% rule for payroll payout. If you wait a month to rehire everybody, you're going to have to pay them quite a bit over that next month in order for that to make sense. So remember that. So those all kind of interplay against each other. So it gets a little bit confusing. There's a couple different rules in there, but try your best. I mean, the main thing is think about how many employees you had and try to get back to round about that. And you can sub. So let's say you had 2 part-time employees that worked half-time. You can bring one of them back as a full-time employee, right? That's an option, and that won't penalize you. So it doesn't have to be the same number of people. It's just the same number of full-time equivalents, if that makes sense. Hopefully that makes sense. Okay, jumping down into the actual costs and where we put those. All right, so the amount, we'll put the amount of the loan that we received. So let's say we received $100,000, okay? So that's an easy calculation. $75,000 is what we have to spend on payroll. Now, let's say we're also, I'm gonna do this as if we're a sole proprietor, all right? So if you're a sole proprietor, right? Remember we talked about how it's just based off of your net profit. So let's say your net profit on your line 31 was $50,000. It's going to tell you how much you can pay yourself, exactly how much is forgiven to you as owner pay. That will be just kicked right back at you. That's your pay. In truth, remember what we talked about, you can do anything that you want with that, really. You can pay business expenses, you can pay yourself, that you will be forgiven based on that calculation, not bank account receipts or checks you're written to yourself, not anything like that. So that amount, that's what you get forgiven as a sole proprietor. Separately, if you're not a sole proprietor, let's say, we didn't have that, you actually as an S Corp owner would put your information in here. So you would put your owner wages here, limited to $100,000 annualized per employee. So if you make more than $100,000 annual salary, you got to limit it at $100,000 for you or any employees. Okay, so hopefully that makes sense. Let me expand this a little bit because when I zoomed in, it got a little. It doesn't want to let me. Okay, so now, I don't know why this is not letting me expand it. Sorry, guys. Oops. Oh, it's because I have it locked down. This says gross wages. I don't know if you can tell, but this is where you put your gross wages. So let's go back to being a sole proprietor. Again, that's going to immediately come down here. That's your gross wages as a sole proprietor. And then you're going to put all the wages for your other employees that you're bringing back. So this is, again, a planning tool. So you're going to look at this and say, okay, total over the 8-week period, I'm going to bring Cindy back and I'm going to pay her $10,000 over that period. I'm going to bring John back and I'm going to pay him $5,000, right? And you can kind of sit and do this sort of thing to see what this is going to do to your costs, if that makes sense, right? So, and actually, we probably have to have quite a few, just looking at the loan amount that we put in. Here, we'll leave it. We'll do it like that. Okay. So in this case, we decided, okay, we're going to spend, our total expected payroll is $56,000. You can also put in your employer, like I said, what counts: employer paid health insurance, employer paid retirement, employer paid state and local taxes. So you can estimate those out here as well for each employee. Remember, for yourself though, if you're an LLC or sole proprietor, you cannot include your health insurance or your retirement, unfortunately. So you'd put all those amounts in, and we'll just stick it with what it is right now. And let's say your total expected payroll is this $56,692. All right. So mind you, we say amount of potential payroll forgivable if headcount is met, 56,692, right? That if headcount is met means if you bring back an average, either average over the 8 weeks, your 4.5, or if you bring back the 4 by February 15th, then you would get full forgiveness. Otherwise, it's going to be reduced a little bit. So that's just something to keep in mind when you're doing this. But that's what's eligible for forgiveness. Now this is what I was talking about before, where your amount that you can spend on other qualified non-payroll costs, rent, utilities, et cetera, is a factor of the payroll costs that can be forgiven. So What this is really doing is kind of calculating out based on this number, okay, how much then, if only 25% of the total forgiven amount, not the total loan, the total forgiven amount can be for rent, utilities, et cetera, what does that mean? So in this case, it means I have $18,897. You'll notice that if I were to look at my total loan, it's $100,000. So some people might think you have $25,000 to use for those things, but if you don't max out your payroll, you don't. So now if I decided, now again, if I said, you know what, I am going to max out my payroll, and ignore these amounts because you actually can't really pay $20,000 per employee. I'm just putting them in here to get the number up. I think the max is, remember the max is that 100K. So it's like 16,000 and some change, I think, per employee for the 8 weeks is the max that you can do. But let's say I did that, you know, okay, I can have 76,000 that is forgiven for payroll, right? Because the 75% is a minimum. You can pay more. You can use it all on payroll, assuming you're not a sole proprietor who doesn't have employees. You can use it all on payroll. That's totally fine. So in this case, okay, the whole 76,000 is forgiven, and now we have 23,000 to spend for rent. The rest of it, right? That whole amount is 100,000 put together. So you can have your whole amount forgiven in that period. So in this case, let's say we did spend 76,000. Let's come down here to rent and utilities and all that. Let's see, we've got 23,000. Let's say we've got some pretty, you know, pretty lofty rent. So rent for 2 months worth is 18,000, or oops, 18,000. And then 5,000, and maybe that's all we have, right? Maybe that's all we have. We only have 23,000 we can spend. In that case, you're going to get your full payroll. You're going to get your full 23,000. You're not going to be forgiven for 308 because you didn't have enough of these other expenses to qualify, right? However, let's say this was 6,000. Well, now the whole thing is forgivable. You didn't have quite enough money to pay all your rent and utilities, but you can still get the whole thing forgiven. So you can kind of play around with this and see like, okay, what happens if I, you know, went back to that 56,000 and I have 18,000, I have 24,000. Well, you can see there's a big amount that is not going to be forgiven in that case, right? You're only going to be able to get that 18,000, even though you have 24,000 in rent and utilities. But you can get your full payroll, but you didn't meet the 75%. So that leaves an amount that you are either going to turn into a loan, that 24,000 either turns into a loan that you have to pay back over 2 years, 1% interest, or it turns into, or you can pay it back right away, whatever you're more comfortable with, right? And when I say right away, a lot of people are thinking, well, if I know that I can't get a part forgiven, can I go ahead and repay it right now? There's not really a process for that yet. More than likely, you're gonna have to wait until your bank says, hey, here's the process for applying for forgiveness. Because, you know, right now they're so focused on getting money out the door. They're not thinking about what the process is on the back end for forgiveness, because you can't even apply until after your 8 weeks, right? So right now they're not thinking about that. They will be within the next couple of weeks, and you'll get some instructions from your bank likely on how to apply for forgiveness. But more than likely, they don't really have a process yet to take part of that loan money back, right? So I think that's one thing. If you try to call your bank right now, you might be on hold for a little while. Make sure you have a snack. So that's really how it works. And like I said, there's some discussion down here around what payroll costs are, which is a lot of what we talked about. There's discussions around here on what qualified non-payroll costs are. So some of the information is broken down if you're wondering, you know, any of that while you're filling this out. But hopefully this can at least give you a way to visualize, okay, here's how I have to use this money to make sure it's forgiven, and to make sure that you are aware when it isn't going to be fully forgiven. Because I think at the end of this, a lot of people are going to get to the end and realize, shoot, you know, I didn't realize that there was going to be a portion unforgiven. So for me, it was really important to create something that you guys would know that ahead of time and could plan, and then say, okay, actually I have another 10 grand to use. Let me go hire somebody to redesign my website, or, you know, whatever it is, and use that money effectively, versus kind of having it more reactive where you're realizing at the back end that you either had money you could have used, or you spent it and, you know, now it's a loan, whatever it is. So that's really, really kind of the point there. So hopefully that tool will be helpful for you guys. And that's really, I think that's all I had to talk about. So Tom.
Yeah, well, Jamie, yeah, no, this is amazing. I think this tool is absolutely fantastic. I know I was blown away with it earlier this week when Yvonne introduced it to me. And I said, we have to get Jamie on to talk about this, to share it with our clients and our folks here about how this can work in their business. And we've had some really fantastic questions here that
Great.
I'd like to start going through some of these. And I know Yvonne has a list too. So for those of you that are tuning in right now, if you have submitted a question when you registered, we do have those questions available as well. And so I know Yvonne is starting to go through those and pull those. So I have, this is a very specific question. So let's try a really hard one at first.
Ooh, I like a hard one.
Works.
Yeah, tell me.
How does that sound? So this was a question from Mark, and Mark asked, as an S Corp with a cash balance retirement plan that is not funded until the following year, how do you demonstrate that that retirement funding is for that 8-week period? It won't be funded until September of 2021. So that seems like a really tricky one. I don't know. Do you have any thoughts?
Yeah, I mean, I think one of the main things is going to be, like I said, it's got to be incurred and paid. And so for you to be able to support that, and here's what I'll say, right? Okay, I want it because I think this lends to a great point in that the banks are all over the place. So that's one thing I've noticed with this is that the banks are where there are not specific driven, like specific, very, very clear guidance on a topic, banks are basically left to make their own decisions. And that is a little scary. And in some cases, even when there is clear guidance, banks are telling people things that aren't exactly correct. So that's been a little bit interesting because you've got how many different banks involved in this, right? Like tiny community banks, big banks. Now you've got the fintechs like PayPal and Square and all of them, right? And a lot of these don't even have really people behind it. It's all, just processing. So the question I have in general, and I think that this speaks to it, is anything complicated, and this was true even in the application process, that anybody that was a little bit different, if you're like, well, I have 3 owners and we're a partner, like whatever it is, anybody a little different, banks were like, I don't know, we only know how to do this thing, right? So if you were a sole proprietor, a lot of people could not find banks that would take a sole proprietor who also had employees, because they figured a lot of banks were like, well, either you're a sole proprietor and you have no employees, or you have employees and you're a corporation, and that's not how it works in the real world. So what I would say is, it's going to be very much dependent on the bank in situations like these. And if you can prove it out, and if you can have support to be able to give them to say, look, this is why you should count it. Some banks might, some banks might not. But again, I think the thing that you're going to have to prove, what they're going to want to see is, show me it was incurred during that time frame, and show me it was paid during that time frame, right? You need support to show it was incurred, support to show that it was paid. So that's where you can think about how that applies in that cash basis retirement account. Can you do both of those things? If not, you probably won't get it forgiven.
Oh, that's great. That's really great. So, and that probably, it sounds like, would apply to most of this. If something's in question, if you're not sure, if there's not clear direction from the SBA, from your bank, from wherever, when in doubt, document. Have proof to substantiate or verify what you're doing. Okay.
Yes.
Wonderful. Yep. I just want to make a quick announcement. We have a lot of questions. So Jamie, are you okay to stay on a little bit past the top of the hour here? Are you able to stick around for a little bit if possible?
Yeah, happy to help. As long as, I might get a toddler wandering in here, but other than that.
No problem. We'll try to, if possible, I'd like to extend maybe an extra 15 minutes. We'll go to about 1:15 Eastern here, so about quarter after, but I know there are a lot of questions. We'd like to get to as many of those as possible, and just let the folks who are our attendees know that, hey, we'll go a little bit longer here to answer some of these questions. So Yvonne, will you go ahead and take the lead on asking some of these questions for us?
Absolutely, happy to do that. Okay, so the answer to your last question leads in perfectly to this next one. So if we pay in arrears 1 week, so example, we will pay last week's payroll this week and we got the money this week, can I pay last week's payroll with it?
So this is a question that is really, really common, and there is not very clear defining lines in any of the guidance. So what I am telling people is, again, until we have something that says, yes, that's fine, right? I would say what they, I would say, again, we go back to the incurred and paid, right? If you paid it during the cycle, but it really was for before you got the money, there's a good chance that that period before may be disallowed, right? And again, it's all going to go back to the documentation and how nitpicky the banks decide to be. Because some banks may say, okay, show me 8 weeks of payroll roundabout when you got this loan. And some may be really specific about show me the period, like run a payroll report that starts with the period, the day you got the money through the last day. So I think that's likely that they're going to do that, in which case any amount that was for previous payroll isn't going to count. So I would operate under the assumption, just so you're not surprised, that until we get something that says, no, that's fine, it is for, the 8 weeks of pay that was incurred and paid. Again, run that bonus at the end to make sure you get it all paid out, but as of the date you got the money forward.
Okay, perfect. So next question, under the full-time equivalent employees, if I have 2 full-time employees and 4 part-time equivalent, how should I calculate that? What should I put in there?
So so what I would do is over the period, take, like, let's say you're doing, we'll just look at a 1 week period because that's easier to conceptualize. If you're looking at how many FTEs do I have in a 1 week period, what you're going to do is add up all the part-time hours, assuming they're hourly, right? Add up the part-time hours and divide by 30. That's your number of FTEs. So you would do some, and then you can do that for each week of the 8 week period and then average that together. That's probably the easiest thing to do. Or even if it's a pay period, like let's say you do bi-weekly pay periods, you can add up the hours and divide by 60 in that case, right? For 2 weeks of 30 hours a week. I think that's usually the easiest way. You could also, if they're pretty standard in what they, in how much they make, or in how many hours they work, right? If like you have an employee that always works for about 15 hours, they're half an employee. But you can do that weekly, and doing it weekly can help, or bi-weekly can help if you've had like staff changes over that time period. You probably want to do that and then average it out. Again, keep record of how you're doing that calculation, because the banks are going to want to see that. That's not something that's easily seen on a payroll report, right? Some payroll companies can do that for you. So check and see. Your payroll report might be able to run full-time equivalents. And some, I think, are trying to be able to do that so they can support their customers during this. But in lieu of that, a well-documented, well-done calculation, I don't think you're going to get a ton of scrutiny. I think you're just going to be able to show, hey, here's my calculation. It's driven off my payroll reports, and here's my other calculation, and compare those two, if that makes sense.
Okay, perfect. And then does it need to be the same people we can hire? Do we have to hire back the same people, or can it be different employees?
No, it can be different employees. So you can hire, and again, like I said, you can hire two or like one full-time employee to take the place of 2 like half-time employees, and that still counts. So it can be different employees. You can move around how much they're making. One thing that was confusing in the original CARES Act that has not moved into actual Treasury guidance, and I think I know why, is the requirement to keep all your employees at least making 75% of what that employee previously made during the last full quarter they were on your payroll. And that sounded like a lot, but basically saying you can't reduce a singular employee by more than 25%. They haven't really put anything like that in the Treasury guidance. And I believe the answer is it's very difficult to compare apples to apples that way, right? Because you can't, in some cases, because we can sub employees, how do you do that calculation? You can't compare one employee to a different employee that might have different job duties. So I don't think that is going to be something. I cannot for the life of me see the banks sitting there and saying, prove to me each individual employee didn't make less than 25%. I think the banks are saying, show me you spent 75%, and then show me your headcount is relatively the same. How you divvy out funds within that, I don't think they're going to get into. That's my interpretation, because I just think when we're talking about $660 billion in loans, they are not going to want to sit there, and there's no way they could get through it. We would still be having these forgiveness calculations and processes for 3 years. So.
Okay, awesome. Thank you. Okay, next question. So we started a business last year. We're a gym, and it was an investment year. So we were in the red at the end of the year. So we were in the negative. Our employees were mostly a few W-2 employees. We did get the loan to cover our full-time employees. Should we even bother with it though, knowing that we won't be open since we've been forced to close?
So, well, it depends on you, and it depends on what you do. If you were in the red, assuming you're a sole proprietor, I'm not sure, but assuming you're a sole proprietor, that means you probably won't get anything for your owner pay out of the PPP, but you could get money. You probably got money to actually pay your employees. You know, this is a tough one because if your employees are making more on unemployment, then that could be a tough discussion because you're saying, hey, come back and I want to pay you. Now, you do get that 25% extra though. So that's where it can be helpful for a gym. Even if you're closed, you're probably still, you know, have rent, utilities, that kind of thing that you'd like to have forgivable money for, but that requires you then to pay people out. So what I would do is, if you can hire those people back, like we talked about, find something they can do that would help your business, even if you're closed, right? Find something they can do from home. Whether it's the same employees or if those employees don't have the skill sets to be able to do the projects that you think would help you in the future, right? Whether that be web design, whether that be social media, like there are a million different things you could have people do from home. If they're not the skill set, then let them, you know, don't hire them back, let them stay on unemployment if they're on it, and go find somebody to hire as a W-2 employee that does have that skill set and be able to use the money in that way. That's what I would recommend, because a lot of people are saying, well, I'm closed, there's no point in this. But if you can actually get things done, if you can actually, you know, basically have almost free money, it's not, I won't say fully free money because you do have employer portion of taxes and things like that to pay on it. But it's almost free money to be able to accomplish something in your business. Why wouldn't you do it? And then, by the way, you get a little bit thrown into you to say, hey, here's some rent and utility money as well. So for me, if you've got the opportunity, you might have to get a little creative, but I would try, you know, is it worth it to sit there and pay your employees to sit on the couch and do nothing? Probably not, because they might make more on unemployment and because you have to pay their employer taxes and things like that. But is it worth it if you can actually further something in your business? Probably. So that's what I've kind of been challenging people, is to maybe think a little bit outside the box on what you can do with these funds that will help your business. And Tom talked about a great way. So
perfect. Okay, so that's super helpful. I know we had a lot of questions about that topic, so I think that's covered a lot of them. So then last question here to wrap it up. For let's say LLC and sole proprietors that have employees, can you just run through again how they calculate the owner draw that's a forgivable amount within the loan?
yes, so it's the exact same way that their owner draw would be calculated. So it's always gonna, if you are an LLC or a sole proprietor, go find your Schedule C in your tax return. You probably had to use that to apply for the loan to begin with. Find line 31, your net profit, take that, divide by 52, multiply by 8. That is how much is forgiven as your owner profit of the loan. Okay. Then figure out how much, and you can use my tool to do this, right? How much does that leave you that you have to then pay for salaries to be able to get to that 75%? Because yours will be included in that. So your employees is going to be based off of, you know, payroll reports and what you typically pay your employees. So it's kind of a hybrid solution there. Now, what I will say is this, and I don't know how they're going to handle this. Some banks did not, especially if you applied early, some banks didn't allow sole proprietors who had employees to include their owner pay. There was a misunderstanding until that guidance came out on the 14th of April from the Treasury. They said, nope, it's just your payroll reports, sole proprietor, you can't include your owner pay, which didn't make any sense, right? Because we knew that that wasn't the case, and we knew that this was open to sole proprietors who had no employees. So why would you not get anything? So I think they remedied that. But the problem was a lot of people got loans before that, or their banks didn't get the memo, right? Like actually, and didn't allow them to do that, or they didn't have a process to take that information. So in that case, I don't know if you can pay yourself out of that money or not, because it wasn't included in the calculation. I would hope they would allow you to, and that would reduce the amount that you'd have to pay out in payroll to your employees. But I don't know that for sure. And so I would check with your bank to see if there's anything that they can do. You know, can they change your loan amount? Probably not, but I think that question has come up a lot, that I've heard they're looking at ways for maybe people to be able to change their loan amount if they got the wrong amount. So if you are in that boat and you're like, well, wait, I didn't know, and they didn't tell me I could use my owner pay in there, I would reach out to your bank, which I know sounds like, something you you really don't want to do right now. It doesn't sound like a whole heck of a lot of fun, but I would do that, and I would see if there's any recourse to the fact that you couldn't include that, and how they're going to interpret that on the back end, and whether, if you didn't include your owner pay in the calculation of the loan, can you still take that owner pay, or does that mean you have to give it all to employees to meet the criteria? That's what I would do.
Okay, perfect. And then I was just scrolling through, and it looks like we have one more that I think is probably a common question. And it's regarding how to spend the money around loans. So I have a business loan with my bank. Am I able to use the PPP funds to pay it down? I understand I'll still be paying my employees the 75%, but other than that.
For the rest of the 25%, you can use it for interest on business debt. So it's very specific to say only interest incurred on other business debt. You can't use PPP. You can't basically use it to refinance other debt, which if you paid down your full other debt with the money, that would basically be refinancing it at a lower rate. They don't want you to do that. But the interest portion that you have to pay, right? And you can't pay early, like you can't prepay interest. But if you have interest due and accrued during that 8-week period, you can pay the interest only on it.
Perfect. Okay, that's all the questions we have around the PPP.
Great.
You know what? Real quick, Jamie, I had a private message come through to me that someone had asked. It said they had someone on payroll who was doing software development for them. And recently they changed to start using a different company for the development of that software. Are they able to use any of the PPP funds to pay for that software development they had going on?
So the only thing you could do, say the beginning again, there was an employee that was doing it, or?
There was an employee. Yeah, that's what it says. There was previously there was someone on payroll, and now they've switched to this outsourced company that they're now using for this service. So
like saying, okay, well, that's what the person was doing, so I should be able to use it for that. Unfortunately not, because they're going to want to see, again, it goes back to this being a payroll loan. So they don't want you to say, well, I don't have that person anymore, so I should be able to use it for the costs that were basically similar to that. They're going to want it to be an actual employee. Now you could hire somebody else to do something else if you want to. They don't have to be doing software development work. But that is one of the things, right? A lot of people have asked me, well, wait a second, I cut down my workforce not because of COVID, like somebody left or somebody, and it's still impacting their headcount numbers. And again, if they left after that February 15th date, they would be counted as an employee as of February 15th that you have to get back to by June 30th. So that's what makes it kind of difficult. Now, you may, in that case, I'm not sure, you may be able to, although that could get a little bit difficult, write the employee, like to have some documentation of that potentially. But I think it's a little risky, right? Like whether the bank will take just documentation that person left of their own accord and not related to COVID. I'm not sure if they would take that or not. Again, it's kind of going to be up to the banks to decide that, but best course to make sure, I would go hire somebody else and come up with something for them to do, or just say, you know what, we just won't have that portion forgiven, and that's fine. So you'll have to do the calculations and see what makes the most sense for you.
Great. And Jamie, I cannot thank you enough here. This information is invaluable. You're the first person that I've spoken to or heard from who seems to know what's going on and how to communicate this. So thank you. Thank you. And judging by the number of registrants and the volume of questions, I think a lot of other business owners and business leaders, small business leaders, are in the same boat. So your information has been fantastic. So what if you could let everyone know again, Jamie, how to get in touch with you, how to download your spreadsheet, and then also to talk a little bit more about your Facebook group, if you're open to members into that as well. And Yvonne's been sharing links and things in the discussion. So if you're on the discussion chat, she's posting that, but if for those who are just listening, will you share that with us again?
Yeah, totally. So the link to get the spreadsheet, if you haven't gotten it yet, is balancecfo.com/PPP planning. So it's 4 P's actually. And that should take you there. You put in your email, it will send it to you. And it also includes a little walkthrough of how to use it. So you don't have to remember all these things. I have a walkthrough that's in there as well. And so you can do that. You can also find me, like Tom said, my Facebook group is really where I've been in there constantly asking questions, doing lives, doing FAQs. So if you have more questions as you go along in this process, it's a great place to join. It's called Financial Literacy for Women Business Owners. Don't worry, guys are allowed. As long as you're fine with the fact that it is like 90% women in there. But you know, we are allowing everybody right now. We've had a lot of men joining recently. So again, it's called Financial Literacy for Women Business Owners. It's a Facebook group. You can either just search for that on Facebook or go to balancecfo.com/group, and you'll be able to join from there as well. And that's really like, that's where, this is basically all I'm doing. So, you know, you say, Tom, it's funny to feel like an expert in something because it's only been around for 5 weeks, you know, but who else, who's an expert at this point is, you know, I feel like this is my morning, noon, and night, right, is spent on all of this and trying to help people just navigate through this season, because it's a crazy season. So we all need a little bit of help, and it's a great group too, because people are asking questions. You can learn from what other people are asking as well. People are helping each other in there. They're posting, you know, different things about how trouble they're having applying for unemployment. So it's not just PPP. We're talking about unemployment. We're talking about PPP. We're talking about the EIDL, economic injury disaster loan. If that's something that you've got, all the stimulus stuff, we're talking about what to do with it. So those are the best places to find me. Also, balancecfo.com is my website.
Great. Well, thank you. And as a recap here, just for everyone who's tuning in, we will be, this has been recorded, and we will be posting this up on our website as a replay message. We have a special coronavirus economy extras that's right at the top of our homepage. You can access any of the videos, previous sessions, and anyone who's thinking about franchising their business or looking to expand their franchise company, we'd appreciate the opportunity to serve you and help you grow your company. And Jamie, again, I cannot thank you enough. We may be asking you back to talk about the EIDL here in a few weeks. So we really appreciate it. And thank you all for tuning in to our attendees. And we will get this live as soon as possible, if not live today. But we'll have it live over the weekend so that you can watch a replay of this and share it with your team or anybody else that you would like to. Thanks for tuning in.
Bye, guys.
Thank you.